Hey everybody, Courtney Smith here, and I wanted to update our case study that we did last week on, I guess it was over a week ago, on Qualcomm, and it was called the Qualcomm gap. So I talked about how can you tell if it's a speculative blow-off or whether it's a measuring gap. So in this particular case, and then I'll tell you what my strategy was. So we saw this huge gap up here, and we started to drift lower. Now, what I said is that if this is a speculative blow-off, we should see it continue to trade lower and lower and lower. And eventually we get down to the bottom of the gap. And if we got all the way down there, most likely it'll keep on going. But instead, we did what the second thing was, which was a measuring gap. So we turned around, and now we've gone sideways for over a week. Now, normally speaking, if you have a big gap up and then a sideways pattern, the market's going to go higher, and this becomes a measuring gap. So what we're doing is we're basically putting in a little consolidation after the gap up in the middle of a bull market. So bull market, gap up, both very, very bullish. Consolidation, 90% of the time it's going to be broken to the upside. So I've rebought back my Qualcomm position, basically at the same price I got out, a little bit higher. And we should be looking for Qualcomm to move higher. But I wanted to kind of bring you up to date on, based on what I was teaching you in that last video, what actually happened. So this is a case study here. All right, everybody. Thanks very much. We'll talk to you later.